Can I invest my IRA in real estate? Welcome back. I'm Ted Thomas, and I've been involved in tax lien certificates and tax defaulted properties for round numbers about 30 years. Now, in this episode, I'm going to cover, can I invest my IRA in real estate? And you're going to see a lot of things in this video that you're really going to like. This is going to be very interesting. It's going to be profitable for you. Basically, there's two types of IRA. One is called a traditional IRA, and the other is called a Roth IRA. So I'm going to teach you about both of those. I'm also going to add information in here about tax lien certificates and tax deeds, and which I prefer you put into those different types of IRA. And I'm going to show you why tax deeds from tax defaulted properties are so profitable. Later in the video, before I finish, I'll also explain the two biggest mistakes that people make at tax auctions. So stay tuned for that last part, because I'll show you how to avoid the big mistakes at auctions. I'll be right back. Can I invest my IRA in real estate? More than 30 years ago, the insurance companies and the banks lobbied the Congress of the United States to get more deposits. What they were after is a lot of small deposits. And in order to do that, they went to the Congress and said, let us start showing people how they could have their own retirement plan. Well, everybody would like to have their own retirement plan. So in order for the banks to get more deposits, they want to show you how to do that. So they lobbied the Congress to get you tax deductions. And that's exactly how it came out to be. All right, so they created the individual retirement account, IRA. One is traditional. A few years later, they came up with the Roth IRA. So let me give you some brief insight into both of those. So a tax deduction comes in a traditional IRA. So you could take money out of your earnings and put it into a traditional IRA. When you take it out of your earnings, that's a tax deduction. If it goes into the IRA and you leave it in there, all the growth within that IRA, all of the growth until you withdraw, which would be 65 or 70 years old, all the growth is non-taxable until you take it out. So here's why people like a traditional IRA. First of all, they want to put money in and take a tax deduction. Then any growth within the IRA, they don't have to pay taxes. All right, so if you buy tax lien certificates, you can earn 16, 18, 24, up to 36%. So if you could buy tax lien certificates in your IRA, all of that growth would be tax deferred until you took the money out. Is that a great deal or what? Absolutely. All right, now, as investors grow, they're going to have bigger and bigger accounts. So Roth IRA is a little different. So if you buy something using Roth IRA money, you have to pay taxes immediately. Well, that might be a very small tax, because maybe you just bought a property at a tax defaulted auction and spent $5,000. And I'll show you examples of this in a minute. So you spend a little bit of money, you pay the tax. All of the growth within the IRA for the life of the IRA is non-taxable. So you pay tax once, and then you don't have to pay tax again. All right, now this is the kind of investment that everybody wants. Now, you probably have a lot of comments about this and questions, so put your questions below me and we'll answer those. If you'd like to know how much a tax lien pays in your state, well, I'll tell you that too, and I'll have a little gift for you, which I'll have for everybody when I finish this particular video. All right, so the question I'm answering in this episode is, can I invest IRA in real estate? Yes, you absolutely can. However, you must have a self-directed IRA. And I'll say that again. You must have a self-directed. Don't buy it at a bank. Don't buy it from an insurance person. Self-directed means you control the investments, not the bank and not the insurance company. And that's where most people do it. They buy it from an insurance company. That means they only can put insurance in their IRA. They buy it from the bank. They only can buy bank certificates. You want a self-directed IRA. That's an absolute must. Now, savvy investors have been buying and selling within IRAs for many, many years. So when you buy, you're going to have a tax deduction. Once you start selling, you can keep all the money in the IRA. So if you keep the money in the IRA and it grows, you're not going to have to pay any taxes. Now look, I'm not a CPA, I'm not an attorney, I'm not an insurance man, I'm not a broker. I'm just an experienced tax lien certificate and tax deed, not only teacher, author, and publisher, but I'm an investor in it. So I'm learning this, doing it from the trenches, okay? I'm not going to show you a book to study. I'm not going to give you any opinions or things that I haven't done myself. You can learn this. It's easy to do, and it's not difficult. All right, now let me give you an example of a Roth IRA and how powerful it is. All right, this will take me 1 minute to give you the example. Take a couple of notes. So one of my clients, we'll call him Client A, purchased a tax defaulted property at the auction. He didn't use his own money. He used his Roth money. So he took the money from the Roth IRA. They now titled that property in the name of the Roth IRA. He went and fixed it up a little bit, cleaned it up, fixed it up. Well, long story short, he held onto the property and he rented the property. All the checks came in, did not go to him. They went to the Roth IRA. So all of that gain in income over the next 10 years went in that IRA. Okay, now when he got all was said and done, he sold the property. The IRA sold the property. All right, he started with $3,000. He sold it for $102,000. No tax to pay. Now, folks, if you make $100,000 in any other endeavor, you're going to pay 25 to 50% in tax. Well, how would you like to make $100,000 and pay 50% of it in tax? You wouldn't like to do that. Well, if you had a Roth IRA, you could have made that $100,000 and kept all of it in your own retirement. All right, now am I a Roth IRA salesman or a traditional IRA salesman? No, I'm not. I'm just telling you from experience how powerful this investment environment is, but you've got lessons to learn. So step number one, get yourself educated at tax liens and deeds. Number two, get yourself educated in IRAs. Do we have facilities to do that? Of course, that's what our business is. So I'm going to finish this by answering two questions, and then I'll tell you about a gift. Okay, the question is, should I work with a real estate agent? Well, sure you should work. Why not? Why not work with everybody? I mean, work with the real estate agent, but keep in mind, you should learn how to control your own destiny. If you sell a property and you could sell it on Craigslist, you won't have to pay a 6% commission. If you buy properties, you should buy them at tax auction. You don't pay any commissions there either. The question is, the deed shows the county owns the property. All right, well, that would be normal. That would be very normal because the county, if they don't collect taxes, then the treasurer has the ability to confiscate and resell the property. When they confiscate, it now becomes a county-owned property. So when you buy at a tax defaulted auction, more than likely you are buying from the county. Folks, if you learned a lot in these lessons, we have a lot more for you, and all you have to do is join my community. Now, I have a gift for you if you do join the community, and all you have to do is go below me, but the gift is a quick start. Now, what does quick start mean? It's just a short course that's online that you can start right away learning about tax liens and deeds. The first part of the quick start is about tax lien certificate. The second part is all about tax deeds. You can learn both of those, and you can do that. Just go below me. It's a free course. It's my gift to you.